We're here to talk about the budget fine print in conversation with the Finance Secretary, Mr. Rajeev Kumar, and also joining us on ET Now is the Chief Economic Advisor, Mr. Subramanian as well. So thanks for taking your time out and speaking to us at ET Now. A lot has been talked about for the financial sector, but we did see the FM really steering clear of any sort of a recapitalization amount being given for the banking sector. What has been the reason behind this?
If you look at the financial sector as a whole, there were many things which have been said in the budget. So I'll come to the recapitalization part of it also. These are the building blocks which he has talked about today in the budget. She's talked about LIC, she's talked about IDBI, she's talked about the Factoring Act changes so as to enable the NBFCs to do the factor, MSMEs UPI, then the SURFACE Act amendment enabling NBFCs to, of the asset size 500 crores to 100 crores being unable to recover, individual loan size from 1 crore to 50 lakhs. Then Banking Regulation Act changes for making the cooperatives far more robust in terms of their regulatory regime, so that you don't have any more shocks what have come to the notice. Pensions. She mentioned about the Pension Amendments Act, which was a very, very important thing, in which even auto enrollment was talked about. You know, the aspirational youth wants keep changing the job. So you have interoperable ones, the contributions go from one place to another, and the various private companies which have their trust or something gets regulated. It is not one today. Then legislation on credit default swaps. So the entire financial sector, coupled with the legislative parts on the farm side, which is also the tenancy, which is also APMC, making it competitive. Then also the entire infrastructure, in terms of the hospitals in the aspirational districts, ports being privatized and given. These are the essential building blocks which you have to weave together to look at a wider picture. Then another one, which is 22,000 crores in IFCL and NIF as an equity. This again leverages around 2 lakh crores additional. So all this is how one has built it. And the financial sector's strength and robustness, coupled with what Subbu can elaborate on the market side, on the bonds, deepening, all that is going to help us and help the economy in revival.
But Rajeev, at the end of the day, given that low credit growth is one of the biggest obstacles really for any kind of pickup in growth, in this kind of whatever you listed a great deal, but will any of this change credit offtake?
Yes.
Why do you say that? Because unless banks are able to lend much more in terms of capital, you beef up their capital, they will not be able to lend.
I'll answer this. If you remember, 2 years back, the capital adequacy ratios of the banks were under severe stress.
Right.
Most of them are above the regulatory norms of the CET1 or the CRR. They are operating at around 13% as against 10.625. Then the liquidity is surplus. The issue is about the issue of risk awareness also, have been addressed very, very greatly in terms of, the fine distinction between a genuine commercial failure and the culpability, if any. Therefore, banks are in a right position to lend and in a far better position to raise capital on their own from the markets. You saw the SBI results yesterday. It was one of the best results one has seen. And then you are seeing the recoveries in the IBC. You are seeing the writing offs continuously because of the technical reasons. Another thing which has been also done today in the taxation part is allowing the banks to carry forward their unabsorbed losses. That also is going to release a whole lot of capital for them. So, Madam also said that if the need is, one would look at it. But as of now, you have to also put a sense of responsibility into their ethos that now be on your own, raise it, and I'm sure they are capable of raising it.
One question which perhaps should rightly be addressed to the DA Secretary, but since you're Finance Secretary, I'm asking you, are you satisfied with the quality of the fiscal deficit? Because if you look at the ratio of revenue deficit to fiscal deficit, there is a clear deterioration. So what explains that? 2.7% is your revenue deficit or 3.5%?
if you look at the fiscal deficit, see, the government has tried to remain very much within FRBM. It's the base year, it was 3.3. This year we have only gone to 3.8. Next year was 3. So we are continuing with that glide path also and have gone to only 3.5. I'm sure some
So,
were,
but for 3 years we haven't been meeting that target.
we haven't crossed that. So maybe expectation was that we will breach it much more, but the financial discipline also has to remain
If you were to
within this.
include the off-budget items, which is listed in an annexure,
This-
but unfortunately we haven't had time to see, what would the final number be?
We'll give you a copy
No, what would the final number be, sir?
of the
If you include the off-budget items
off-budget,
also,
if we include,
what will your fiscal deficit number
I'll
be?
give you that number just now. So the another thing is that even if you are if you have gone by 5.5, it is just 1 lakh crore roughly. Of that 22 you have escrowed in these two kind of DFI. One is DFI, one is another, which you have gone back to leverage another 2 lakhs. So you have not just you have escrowed it too much to inspire the growth. So that's what it is.
So, let me add, actually, I think, yesterday we were discussing about transparency, for instance, right? If you look at the top line growth projection, it's 10%. Which,
what is
given...
what is the deflator you assume?
So, deflator actually would be about, so 6.5% plus 3% gives you approximately, thereabout, 6 to 6.5.
Right.
So, it's a very realistic estimate.
Very realistic.
The EBR items used to be in the budget, but this time actually it's part of the annexure of the budget speech itself.
Right.
And everything, and if you read even the footnote there actually, so all the items are provided for
Tax
very
estimates.
clearly.
Tax estimates, very realistic.
And actually, yes, I think that the tax revenue projections also
very
are
realistic.
actually far more. And I wanted to respond to your, the question that you asked actually about, the revenue deficit. Look, this year, the reason we're actually having to breach the fiscal deficit partly is because, for two reasons. One, because the nominal GDP growth rate has gone down, your revenue collections are down. Further, we've actually given the corporate tax rate cut, as a result of which your revenues are down. So, in a year like this, where revenues actually do go down, you will have your revenue deficit. So, I think to interpret it as basically a secular deterioration in the quality of spending is, I think, just reading into a trend from just one observation, which I would actually, not recommend.
And another thing to add, the capital expenditure is going up by 21%.
Sure, but this is the overall ratio.
So the FD you have not used only for any scheme which is not adding to the creation of the assets or the jobs.
Sir, just to ask, you were talking about LIC as well. Have you come to a conclusion that whether this will need an amendment to the LIC Act, what kind of quantum are we looking at, and what will be the general appetite for something like LIC, because it's a huge company?
LIC being a very, very huge setup and an establishment and having an influence in the entire market, we are taking all assessments of the extent guidelines, and also including the consultation with the legal department for a legislative change if it requires. We'll come out with all these details quickly.
And I want to add, actually, I think this was something we were discussing yesterday as well. When you put together the the disinvestment of BPCL and LIC, there is an important change in the way disinvestment is being viewed at.
Absolutely.
I think, which needs to be definitely be recognized. In earlier times, you would basically draw up your budget and the residual entry would basically be a disinvestment because you wanted to meet a certain target. But now, this is about actually enhancing efficiency by bringing in, listing in the stock market.
Provided it's done. The skepticism is because it's not been done. Even this year, we're not achieving the target.
Because
I think that's important to, let me just sort of respond to that, right? That there is a certain, and Rajeev would actually know this very well, that there is basically a certain timeline for these things, and the BPCL process has been on, the Air India process also has been on. It has spilled over to the next year, as a result of which actually, and given the deadlines of 31st March, we are actually not able to meet the deadline. But as a result, the anticipated amounts actually next year should be should be higher.
So one last question before we let you go. Would you agree with Mr. Garg's assessment that this year's fiscal deficit is closer to 5%, not 3%? And if you were to make the adjustments that he has mentioned required to be made, what would the fiscal deficit be this year as well as next year as a ratio
You
of GDP?
will have to ask him how does it compare with the last year, what it was and what it is now.
No, I'm just asking if you make the adjustments. He has said certain adjustments need to be made.
See,
If you make those adjustments, which presumably are in the next year, which we've not seen.
See the EBR. It's actually the institutions are borrowing on their own strength. Who is borrowing? It's the PM Awas Yojana, it is NHAI.
Sure.
So they are there on their own strength, and as was mentioned that we are taking care of their interest burden. So, and it is permissible, it's well within the rights.
But what will the number be, sir? I'm just asking what will the number be?
No, but Mythili, you have to be a little bit more careful here actually in just not adding the number directly, because
right.
you know why? Because this is a nuanced point. If you, for instance, take let's say NHAI's borrowings. NHAI's borrowings actually it borrows on a balance sheet where it has revenues, and therefore actually it is no different from let's say a private sector company going and borrowing.
No,
and
there is a government guarantee, which is doesn't have private sector doesn't have.
Let me finish this point, right? See, the government guarantee matters a lot more when you actually have an FCI which doesn't have as much revenues, and therefore all the obligations are effectively the obligations of the government. But if you have an NHAI which has its revenues, actually like that, for instance, if you take Tata Sons actually might be guaranteeing a company or loan taken by, but you don't go and add that to Tata Sons balance sheet, right, and say this is the borrowing of Tata Sons. So why would you do that for the government?
Because it impinges on the taxpayer.
And that much, that much outgo from the budget on the interest part is factored in.
Sure.
Yeah, exactly.
What would that number be? I'm just asking, what would that number be?
See, my point is that is actually not the right question to ask, because it actually is you are combining apples and oranges there.
Sure.
So that's number one.
Maybe.
Second, I think, which is as an economist, why do we worry about this number? We worry about this number possibly because there might be some crowding out, right, when you take the overall. Here's where actually another important point which needs to be kept in mind is that if suppose some of this borrowing happens from let's say the small scale savings, which is not accessed by the private sector, there is a clear segmentation in the market. So to basically take, and that's the 2 points that I want to make. One, by adding all of this together and saying, and therefore there's going to be a crowding out, we're actually making two fallacious observations
the argument
here.
basically that has to be financed out of savings, and if your savings is only about 7% of GDP and your real fiscal deficit is of the center and states is about 7%, then there is effectively a crowding out. It might not happen now because there's not much private investment, but there is a problem of lack of funds. No,
I think on that actually some of the steps that have been taken in this budget are very important, because if you take for instance the allowing of Government of India securities of different with basically no restrictions at all, that will bring in a lot of the passive investment that happens, passive investment that happens through the index funds, right? Also the abolition of the dividend distribution tax will bring in pension funds and insurance companies, so both debt and equity. So you making this ceteris paribus, but you will actually have savings coming in from the foreign as well. So as a result, the savings will change.
All right. On that note, sir, many thanks for taking your time out and speaking to us. And taking our completely out of time.
Thank you so much.
Thank you, sir. We're here to talk about the budget fine print in conversation with the Expenditure Secretary as well as the DEA Secretary. So thanks for taking your time out and speaking to us at ET now. Mr. Chakrabarti, let me first begin by asking you about the fiscal slippage that we've seen. Although you've taken the escape clause 0.5% under the FRBM Act, but for subsequent years, we're looking at a 3.3% target. Every year we see the roadmap being shifted. Will this really do enough to revive demand, to spur consumption, which was something that everybody was talking about if the escape clause should be invoked?
Your questions I can divide in two parts and answer accordingly. First, you have mentioned that deviation from the fiscal glide path as to what numbers it has been done, more factual part. Secondly, you have talked about reviving of demand, consumption, investments, and so on and so forth, so that you have a higher GDP and subsequently better per capita income in the country. First part, for year revised estimate for year 2019-20 and budget estimate for 2020-21. The Finance Minister has announced that she is taking resort to the clause provided in Section 4 of FRBM Act, where there are unanticipated results of a certain structural reforms, and that happened right from the GST, and certainly in a very large measure, very proximate reason was the indirect tax cut. Those things, because that particular measure was not a demand side measure substantially, but more of a investment side measure. So it takes, it sort of pans out over years. So it had to go over at least a couple of years, and last year it came towards the end, more towards the later part of the year. So the fiscal glide path which has been defined, 3.8 to 3.5, and as you can see subsequently in the medium term strategy policy statement. So that's the first part as to the numbers. We have very clearly stated that we are going to follow the glide path to come to 3%, which is the decided goal, number one. Number two is, these things, what are we doing for demand and investment? All this happened because idea was to spur investment last time, and now this year you again see the demand side push from both the sides of demand side, from the direct taxes. From the indirect taxes you see the DDT cut, and another measure to get investments is from the debt side, because debt side has been really the bugbear, if you ask me, frankly.
So if I could just interrupt you here, I have no quarrel with your breach of the fiscal deficit. In fact, I've been a strong votary of that. But are you as satisfied with the quality of the fiscal deficit? Because your revenue deficit as a ratio of the fiscal deficit in fact worsens, clearly showing that the extra borrowing is not going towards capital expenditure, it's going to revenue expenditure.
Well, again, let me take you through it and look at the quality part. I'm glad you asked me that question. Very few people have been asking, and
my grey hair.
This question has not been. The quality of expenditure has been very substantially upgraded very recently. Front-ending the capex, which happened last year, and if you see the year-to-year comparison up to December, 16% capex was higher. Next year, the provision is more than 20%. Actually, it's 23% or 22%. So we have upfronted it. Secondly, we have not only done that, the government has also provided for a catalyst for taking much larger expenditure to push into the infrastructure projects. That is the announcement for an equity of about 22,000 crore that has been provided. Now for IFC companies, that is 1:10. I'm not even resorting to that. I'm just taking 1:7. That amounts to 1,50,000 crore.
Sure, but it should show up ultimately in your fiscal deficit breakup,
no? It will have a lag effect. Investment side inputs always have a lag effect. Therefore, it's important that an investment comes in. It will generate jobs immediately. It will create that we have investment infrastructure deficit, and that needs to be sort of filled in very quickly. That is why Prime Minister had announced the National Infrastructure Plan, and this pipeline got announced, and now there are measures. People had been talking about where are the financing measures for them. The financing measures have come both from the budget and come from the market as well. And the third announcement on the bond side, because again you have an asset liability mismatch. So that part again has come by announcing that certain bonds would be open to international movement of capital.
There's an ETF also that...
and then there is the ETF. So that is the next layer. So if you see, the entire thing is a very crafted strategy towards spurring demand on one side, pushing investments very quickly, and pushing sustainable investments. You must understand, we had a lot of banking problems in the country because it was, again, asset liability issues, and it was not sustainable. So
what is the tax-GDP ratio that you expect to be moving to? Have you crossed that 10%? And the skew towards indirect, which is regressive, does it still continue?
I'm going to ask the Revenue Secretary that question, and then when he comes in, he'll find much satisfactory answers.
We didn't give enough time questions, so the questions that couldn't be asked to him, we're asking you.
No, certainly there is, let's face it, theoretically in this country we have a headroom for larger taxes. What you are choosing at a particular point of a time from a menu of taxes is a different issue altogether, because that point of time you have choices. But we are settling towards a more stable tax regime,
Right.
as you can see, and I guess that's critical. Then you could sort of.
Let me ask the expenditure secretary, sir. You know, we have seen how subsidies have been cut significantly in the budget this time around, but many say most of it is being funded through the National Small Savings Fund as well. Will we see this pattern continue, and isn't there a worry there in that sense?
Let me explain this at a little bit of length, and I want to just go back to your previous question about quality of expenditure. So we are projecting an increase in budgeted expenditure, that's excluding extra budgeted resources, of more than 11%. But we are also projecting an increase in capital expenditure of more than 21%. So if you look at it, there may be base problems with quality of expenditure which are perennial in a developing country, revenue deficit, etc. But in this particular budget, the proportionate increase in capital expenditure is twice the increase in non-capital expenditure. One. Two, when you're looking at a situation where the economy is weak and you want a stimulus, well, revenue expenditure is also a stimulus. I mean, it is. There's a slight difference between. It's not long term.
The fiscal multiplier is much less from revenue.
It is less. But I mean, Keynes once talked about digging ditches. So digging ditches in Narega is also something that stimulates the economy in the short run. I'm just being very pedantic.
Sure.
The second part is coming back to what you said. So we have reduced the provisions for Food Corporation of India. We have enhanced the provisions, and this time there is a full annex with the budget speech. It's an enhanced and much longer annex. It has it covers all the extra budgetary borrowings of all the Government of India institutions. It covers the borrowings from the National Small Savings Fund.
We're here to talk about the budget fine print in conversation with the Revenue Secretary, Mr. Ajay Bhushan Pandey, and also the Disinvestment Secretary, Mr. Tuhin Kanta Pandey. Also joining me on ET now will be our consulting editor, Ms. Mythili Bhusnurmath. Mr. Pandey, congratulations for the budget. Let me first begin by asking you also about the personal income tax cut. Everybody was talking about how this is going to revive demand, spur consumption, but we're at a time when from 3 slabs we're on to 6 slabs now, and also looking at 2 different systems. Will it really do the job of simplifying the tax regime, which we were hoping for, to begin with?
No, I will tell you the background. You have seen that in September 2019, last year, we brought in this corporate tax reduction, and we gave a very, very substantial rate cut. And there also, what the principle that we followed, that you can have a lower tax rate, but all exemptions gone, and that has simplified the system. And our experience is that more than 90% of the companies, my estimate is, because we have got some indication from the advance tax that they paid in the month of December, that more than 90% of the companies, they are now preferring this new and the lower corporate tax system. Now, based on that, we thought that perhaps we could also do the same thing for the personal income tax. If you see the total number of exemptions, and it has been mentioned by the finance minister in her budget speech, that there are more than 120 exemptions, all different kinds, and they have kind of come in, over the period of last few decades, each one, and that actually has led to making this entire income tax law very, very complicated. So we want a simplified system, and simplified system that if supposing somebody earning X amount of rupees in a year, then he should know that how much tax he can pay, if he has to pay, and it should be calculated on a calculator, or even without a calculator, with no professional expert. But there will be also a class of people whose financial conditions could be different and where he will actually need few exemptions. So, we do not want to rule them out, and we also want to provide them the facility. In fact, in many developed worlds, there are some similar system like for example, they allow you some flat deductions, or if you can itemize your deductions, then you will have to take a itemized deductions. In this particular case, what we have said that if you are going to take a deductions, your tax rate will be X. If you are not taking any deductions or exemptions, your tax rate will be Y.
Mr. Pandit, I can just interrupt you here. The reason, the logic that you're giving or rationalization of exemptions is perfectly valid. We have far too many. But given the fact that many of these exemptions are for, at least a large number of them, are for long-term savings in a country which has no social security. Not everybody is employed by Government of India. So there are a large number of people who have to provide for their own old age, LIC, life insurance, housing. These are all exemptions that are required, particularly in a country where people are financially literate. So the person might prefer today to pay less tax, but not think about tomorrow. Again, these are long-term funds that you can use for infrastructure. So insurance, housing, these are things that the government wants people to invest in. So could you not have rationalized the exemptions while keeping the exemptions for long-term savings?
No, you see, everybody's position is different.
Sure.
And what we have said is that in a certain stage of life, let that person take that decision. I mean, to think that our taxpayers would require advice from somebody else to what is in his best interest, that also is not very correct to assume. A person, if he thinks that yes, he has to make some investments, then he has to make investment in the right products. So he should have the freedom to choose that which is the right product that he wants to make investment, and for that, if he needs certain exemptions, he can be in that regime. It is also what we have allowed is, at this point of time, that let us say in this year I take no exemptions. The next year, my the life situation changes,
so you can move back and forth,
and then I can move to the other system.
Okay.
So we have allowed that flexibility. So the problem that earlier used to happen is that if someone was not having some surplus money to invest into the various exemptions and those products which used to give them exemptions, he was actually at the disadvantage. And so we have tried to remove that disadvantage, and provide, saying that yes, if you do not want to invest anyone, or you don't have money to invest into those products, then in that particular case you will be subjected to a lower tax rate. But tomorrow, if you get into a situation where you feel that yes, you need to take some insurance, or you need to make certain long-term some kind of a social security investments, then in that particular case you are free to use.
It complicates the tax system even more, and I'm sorry, I'm going to interrupting purely in the interest of time, because within 5 minutes you tell me you have to go, understandably so. So next question really is on gross tax revenue. I think for the first time we've seen an absolute decline. In such a scenario, how difficult was it for you to project, because your new budget estimates are lower than your last year's budget estimates? That means for all the talk about growth, 10%, etc., you're not really very, very confident about tax revenues, right?
No, I will tell you about the tax revenue. We are quite confident about our tax revenue, because remember at the last time the budget estimate that we gave, that time there was no corporate tax cut. Now, in a corporate tax, it's a historic corporate tax cut. It has never been done before of this scale, and implications would be somewhere. We feel that implication would be more than 1 lakh crore, and in the range of 1 lakh to 1,45,000 crores. Now, that is almost 5 to 6% of our total tax collection. So if you remove that and you give an allowance to that, then, and the nominal growth in this year 2019-20, and then the tax buoyancy, and if you make that adjustment, then our tax revenue has grown to that extent.
What is the tax GDP ratio that you're expecting at the end of the year?
The tax GDP ratio depends upon the direct tax, indirect tax.
Sure.
So total, in the budget estimate, in the revised estimate that we have provided, that in the direct tax we have said that our revised estimate will be 11,77,000
As a
crores.
percentage of GDP, sir?
The percentage of GDP would be around more than 10%.
And next year?
The next year also, because it is tax to GDP ratio that doesn't change dramatically, so it will be around 11%. So we have
Right.
to that extent we have done the calculation.
So let me take it across to the Disinvestment Secretary as well. You have a tough task ahead of you. Almost 2.1 lakh crore rupee disinvestment target that we're talking about, which is the highest ever so far. What is going to be the game plan? I do understand that a lot of privatization will happen in the first half of the next fiscal year, but how will you ensure that there's a smooth pipeline, because this would eventually mean that you will have to garner almost about 15 to 20,000 crore rupees every single month to be able to meet that target?
Let me split it into two actually. This 2.1 lakh crore is, there are two parts to
Right.
it. One is 1.2 lakh crore where we are talking of disinvestment from the CPSCs,
Okay.
and 90,000 crore we are talking of
Strategic
disinvestment from banks and insurance companies. Honorable Finance Minister announced two big ticket disinvestments about banks and financial institutions. One is the IDBI bank and another
And
one is
LIC.
IPO of LIC.
What
Like-
percentage is the government likely to offload of LIC?
Well, that
Any
will be,
decision?
well, that's not been decided yet, but that will be worked out as we structure the transactions. The other part is the CPSCs, which is 1.2 lakh crore. Of course, it's a very big target, but then we have transactions lined up. On 20th of November, when the government took some big ticket disinvestments, we have moved pretty much forward on that. One of the things is BPCL, as you know, is a very large company.
Will it happen this year, sir?
It will actually happen 2021 FI next year.
That's true, but this revised estimate shows 65,000, though as on
Yes.
date you only done 18,000.
No.
So how will you do that
18
for-
plus 16.
The
18 plus 16
18,000.
is EPA.
CPS.
We just raised last 2 days
Yeah.
16,500 crores.
Yes.
Almost we are at 35K.
35, yes. 30,000 short.
No, 30,000 short, but we'll make it up because we have, as you know, that we have 2 or 3, basically 2 pillars.
Okay.
One is a minority stake sale,
Yeah.
where we have OFS,
Right.
offer for
Sure.
sale, where we have IPOs, where we have buybacks, so and the ETFs. So these are the 4 instruments we use for, and sometimes dribbling as well. So these are the 5 instruments that we use for, where the management control is still with us, but we still disinvest. The
Why
other
does
part
SUTI
is
not figure in any of this?
the SUTI is also a part of disinvestment program.
But why? That should be much easier to move ahead with. No, it's just
No, the
selling in the market.
No, SUTI disinvestments have been taking place. SUTI
It's
disinvestments
true,
have been taking
but
place.
can the government not exit completely?
No, I mean it
When the
has
market
to,
was booming,
No, the government has to take into account the timing of the decision, the market, the size of this. We have to be based on our advisors, because we cannot flood the market and depress stocks all at a time. So depending upon that, we have all these things lined up. So we are very confident of actually not only achieving 65K, but might be exceeding. On the strategic disinvestments and privatization, I think some of the very bold decisions have been taken in November. It's in end November. So the transactions have now been lined up. For example, BPCL itself is a market cap of about $15 billion. Now this is a very large investment, so obviously there will be a few months before which we can actually conclude it. But our EOI will be shortly coming. So Air India EOI.
Can we expect it in this fiscal year itself? The EOI for BPCL?
No, EOI will come up
in a few days.
any day. In fact, it could be as early as anything. So we are just ready about that. And then we will have, we think that, probably the qualified bidders would be in place. And the first stage will be over within this financial year, so that we move to the next stage, which is actually due diligence and financial bidding. So we have a good structured process of privatization lined up. We have Concor, we have Shipping Corporation of India, we have the other strategic disinvestment. So these are all lined up, which are actually major of them, majorly they will be maturing in the early part of the next year.
talk about the budget fine print in conversation with the CBDT chairman and also the CBIC chairman. So thanks for taking your time out and speaking to us at ET now. Let me first begin by asking you, everybody was hoping for a personal income tax cut. You have done it. However, with riders, if I should put it like that. And, as Mythili was also pointing out, it discourages savings in a country like India, savings that one would do via HRA savings or perhaps even ATC.
Let me address this question in a different way. First of all, there was a clamor that after the corporate tax rate cut, there was something to be done for the personal income tax. And the stated government policy is that we will continue to phase out deductions and exemptions, but yes, we will keep on lowering the tax rate. And if the compliance kind of moves up, which is going up day by day, there would be a case for further reduction. So that would be putting more money into the hands of the people.
Sure, but should you not balance the need for long-term savings with the need for making simpler taxes?
But at the same time, ma'am, we will also have to think in terms of whether we will continue with the old legacy of having the income tax as the vehicle for carrying out all these programs. Let's have a rethink on that issue as well. Let income tax be pure, simple affair, which motivates a person to declare his income truly and fairly, pay his taxes properly. And for the other aspects of financing and this thing, there are other departments, other ministries to take care of that. And if he gets an attractive rate of return there, he will definitely try and save the money.
It also helps garner long-term funds for investment in things like infrastructure. So tax is never seen purely as revenue mobilization. No? In a developing country, it's been used for equity, which is why we want to know what is your ratio now of direct and indirect tax. Is that tax structure still regressive?
We are gradually moving towards more and more of direct taxes component.
What percentage, sir, is it now today?
I think it will be roughly about almost crossing 50%.
No, is it of the total tax revenue? Was it crossed 50, then it came down to below 50? So now
it is fluctuating, but it will definitely keep on increasing.
So at the moment, it is not yet 50%.
It is going it's showing an upward trend.
And what is the tax to GDP ratio? Since both of you taxmen are here, what is the tax to GDP ratio now?
Around 11% I think.
11% as on date?
Both put together.
Both put together, despite the decline in the revenue.
Yes. Because we will be getting around, let's say, 11 from IT, 11.5, 9.5 to 10 from us, around 21. So 10 to 11% remains. Because GDP being around 2.1 to 2.1, no? So it should be around 10 to 11%.
Sir, the Revenue Secretary was also talking about phasing out exemptions. What is going to be the roadmap for that in the long term?
As it is, you see, so far as corporate tax is concerned, we have phased out a lot of deductions and exemptions. Others which we could not do because of the time period involved, they are continuing. And if people are availing of certain exemptions, say like MAT credit, let them exhaust that MAT credit and then come back to the new regime. Likewise, in personal income tax also, as FM had mentioned in her speech, that more than 100 deductions, exemptions were there. And all, they do not kind of synergize or coagulate into something issue-wise. Say everything and everything is there. And an attempt has been made to rationalize that. Right now, out of 100 odd exemptions, 70 have already been reviewed, and the rest will be reviewed in a phased manner.
You've taken a very high buoyancy for personal income tax, 1.4%. What makes you so confident of achieving that, given that buoyancy has never been so high, and you've given all these, lower rates?
The reason is a conscious belief in the fact that now we are getting information from multiple sources, which we intend putting up on the portal for the AO and the taxpayer. This reporting of income or the reporting of financial transactions, if it is made known, just like 26 AS gives you the information about your tax payments. So likewise, all the financial transactions which a person, a taxpayer is doing, if it is available to him, that would enable him to fill his return properly and correctly.
It hasn't happened so far, so it's just...
it is happening in the sense that we have already launched a part program of pre-filling the returns. With this increased information, that would be further pre-filled. all the taxpayer has to do is to confirm okay, whether this transaction is there or not, this income is there or not. Added to that, there is a total convergence in terms of sharing of information between the CBDT and the CBIC.
That is true.
So you see, from all financial parameters or business parameters, if the free flow of information is there, chances are that the compliance has to go up.
So roughly what is the GST monthly average that you assume for next year? Last year it was about 1 lakh crore, we achieved it only in the last 2-3 months.
But last 2-3 months, I think you would have also seen, this month we have been achieving very
So
well.
what have you achieved, kept for next year?
So
roughly?
we also expect that the rate will go up, and I mean, say the uptrend will go up anyway, because the basic
Approximately
idea is
how
that
much would your monthly collection be?
because now it should be, next year we should be almost maintaining that same level. I mean, say water is a
1 lakh crore?
1.1 kb Smith, we need to keep it up. Then only we should be able to achieve that revenue anyway.
And have you budgeted for inclusion of any of the excluded items now? As in petrol,
I think you are thinking
alcohol,
about petroleum,
electricity?
I mean, say ATF
yes.
and everything, no?
Yeah.
That is a call to be taken. I
So
mean, say,
in your estimates you have not
no,
taken?
we have not taken that one, but I think the call has to be taken by the GST council later on, whenever the meetings takes place.
So
Also.
there's also a lot of clamour on streamlining GST further. In fact, in the last GST council, we also saw there was a lot of discussion on that. Where are things from here? How soon can we expect the streamlining of GST to happen? And once it happens, that would mean there would be some tinkering of rates as well.
Yes,
How is
that's
that going to impact the current targets that you've set out?
Yeah, basically, if you look at that way, there are a few things that the GST, I mean, so we are planning to do in the GST. One, as everybody was saying, the return filing was a very cumbersome process. That is one objection that has been raised for a very long time. So we are making it much more simpler, and I think already beta testing has already been done anyway, and we have been asking people also to give suggestions as to what is the difficulty that they are facing now. People have given suggestions, and that has been discussed and being, I mean, so taken care of also. So once the launch starts, it becomes much more easier, because we have taken care of the people's interest also. I mean, say, it's always to know that, okay, where the shoe pinches from the person who wear the shoe. So the people have already come back and told us that. Secondly, we are going for electronic invoicing. You would have seen that one. That will also help the industry also, because automatically it gets filled in the system. So you don't have to upload it separately. And as far as the department is concerned, you can get the data also very easily that way. Thirdly, we have something called the QR code. You would have seen that one. That also increases the digital payment also by anybody who wants to pay digitally. Thirdly, we are going to match the invoices that are in the system. And once the matching happens, the persons who are gaming the system will be caught. So the idea is to see that, okay, make the way much easier for the honest taxpayer and make it extremely difficult for the gentleman who wants to game the system.
This constant tinkering with customs duties, how wise is that?
It is not a constant tinkering. If you look at,
I mean, like furniture, etc., does it really make a difference?
No, definitely it makes a difference. Let me tell you one thing. A lot of furniture comes to this country. Almost 5,000 to 6,000 crores of furniture comes to this country. We are a country which can manufacture a lot of furniture over here. If some duty difference is there, I mean, say, we have to take a very conscious call, because I cannot afford to support an inefficient industry in my country, so that it will be a burden on the consumer. But it should not be that, okay, my industry should suffer because somebody is dumping the material on here also. So
but
a calibrated approach has been
done.
No, but it will be very difficult for everybody to go for anti-dumping. Anti-dumping also, the procedure is also a difficult thing. So idea is to see that, okay, a calibrated approach is being done. For all the items, if you see it also, most of the items where we increase the duties are things that can be manufactured by MSME over here, like freezers are there, pedestal fans. They are all very products which our MSME is quite capable of manufacturing.
So monetarily, how much do we stand to gain with the duty changes?
No, we'll be quite substantial amount will be coming, because mostly from cigarettes we should be getting the major chunk anyway. Otherwise, we'll be getting around the same, around 7,000 to 8,000 crores will be definitely be coming in anyway. But you cannot make a hazard a guess anyway. What I'm saying is that, okay, depending on how the import is going to behave, that depends on that one.
So there was a strong demand for some kind of rationalization of long-term capital gains, at least in terms of the holding period. And the genuinely is the case. Equity, 1 year becomes long-term. In the case of property, it is 2 years. Listed securities, unlisted securities. Wasn't this an opportunity, since you've cleaned up so much on direct taxes? Wouldn't this have been an opportunity to do that?
Let me begin with one basic premise that we know that we are conscious of the fact that there was a clamor for abolition of long-term capital gains.
If not abolition, at least uniformity in the holding period.
But at the same time, when we see the tax jurisdictions outside, I can't recall of, maybe just barring 1 or 2 exceptions, everywhere capital gains is subject to tax. Second issue is of rationalization of financial assets or non-financial assets like that. But for the present, we felt it proper that we continue with the present regime, because we were more focused on personal rationalization of personal income tax. And maybe over a period of time, there would be an occasion to review this also.
What about the famous or infamous DTC? When can we hope to see the report in public?
DTC, yes, I mean, so it is currently under examination by the ministry, but at the same time, whatever we had already thought of, we have gone ahead and done that. Okay. If there are any features in the DTC which needs to be incorporated in the subsequent this thing, that will be examined and implemented.